there will be much more storms coming up. Hi guys, it's Eric from Hong Kong based in Germany. I've been investing since I was 17 years old for almost 20 years. I want to give you guys alternative perspective about investments related to Asia. The market is rebounding. Alibaba went up 8%, Meituan and BYD each went up 9.5% in Hong Kong. So is it everything back to normal? No more crackdown from the Chinese government and no more market crash. Well, I can tell you that Westerners have misinterpreted a lot of what Chinese government and the media said. I will tell you why. The trigger of the rebound was that Chinese regulators talked to top investment banks and trying to calm their nerves. Top Chinese media also wrote articles on the topic with softer tones. If you are new to this topic, I've made a number of videos about it, especially on Alibaba, BYD and DD. So check out the link above to my channel page so that you have some background understanding what happened in the past few months and past few days. Media around the world reported that the Chinese Securities Regulatory Commission (CSRC) arranged a video call with top investment banks, for example UBS, Credit Suisse, JP Morgan and the likes. The purpose is to explain to them that those crackdowns are industry specific, so they are not intended to crash the whole market. 5 state media released articles on the same day claiming that the market crash would not affect the long-term upward potential of the Chinese economy. Xinhua and China Economic Times, both directly under the central government, acknowledged that this would affect overseas investors. However, it does not signal the change of China's determination to open up itself, whatever it means. Xinhua even quoted the chairman of CSRC saying that he's open to any options where Chinese companies want to be listed. CNBC also quotes sources saying that Chinese government is not going to block VIE, variable interest entities, which basically Chinese companies use to circumvent the government's control in raising foreign capitals and raising capital in general in order to list overseas. Shanghai Stock Index went up 1.3%, with its tech-focused index of CHINIX went up 5%. Hong Kong's Hang Seng Index also went up 3.3%. All sounds very good, right? Is it back to normal? Not really. Unlike in Germany or in the US, you need to read between the lines even with media in China. The wordings make huge differences. And you need to know that the media are basically representing the government's voice. So let me interpret for you guys. Number 1, the most common message was that the long-term upward trend of Chinese economy would not change, meaning there will be much more storms coming up in the short term. The second message is that the crackdown is for the good of the society, meaning they are right and they have no intention to change the course at all. The third message they often say is that the Chinese capital market has a very strong foundation. Well, to Westerners, that sounds like just some nice phrases, right? No, the key point is Chinese capital market, Chinese. What it meant is that they don't give a if this is not endangering the Chinese capital market itself. If you're overseas, you may well move onshore to Shanghai or Shenzhen, or at least to Hong Kong. How about the messages from CSRC? How should we interpret them? Well, that's why you need alternative perspective about investment in Asia. So remember to subscribe now. Even better, click the bell button next to the subscribe button so that you're not going to miss out my analysis. Okay, back to the topic. CSRC mentioned that this crackdown should be industry specific and also there's no intention to have the shockwave across the board, meaning there will be more crackdowns on specific industries and you better get used to it and not crashing the whole market. Even more importantly is that CSRC actually did not say anything to reassure the investment bankers when they met. In fact, this is coming from much higher in the hierarchy, possibly from the president. They have no say whatsoever. They might even just saw it on the newspaper just like you and I did. So they cannot do anything at all. According to someone who joined the meeting with CSRC, it is clear that more crackdowns are coming and it's obvious to everyone, quote. Also, regarding the VIE, there's no clear answer from CSRC what they are planning to do next according to the investment bankers. We have saying in Hong Kong that action is more honest than words. On the 29th of July, $300 million were moved out from the Hong Kong Stock Exchange back to China, and this is the 9th consecutive days, a record since December 2018. And of course, the amount in the past few days were even much higher than $300 million. You need to know that these are institutional investors in China. They know how the game works, so do not ignore this kind of signals. Furthermore, Hong Kong media reports that the Chinese government also want to regulate the property management industry and even regulate the price of glass manufacturing. So even though the government is aware of the investors' reaction, they might do it a little bit more careful in the future, but they do not have intention to stop any crackdowns, and more crashes are coming. Okay, what should we do then? If you have high risk tolerance, then it could be a chance for you to buy low and sell high. Buy whenever there are crackdowns and hitting a new low, and then when it goes up, then you sell. But of course, you need to enforce cut loss and be very strict about it, because you need to preserve your capital. What if you say that I don't have such high risk tolerance and I cannot sleep well? Then you need to get out. In order to lose less money, get out when there are rebounds, and I expect some rebounds in the coming few weeks. Of course, if you're talking about 10 years, 15 years long term, then you can just hold it. This is just noise according to many fund managers. But expect more roller coaster rides. Maybe you'll be accustomed to it, just like the mainland Chinese investors. After all, this is the game how they play it in the mainland Chinese stock market. So what other topics do you want me to talk about? Leave me in the comments below. If you like the video, remember to like, share, and subscribe. Even better, clicking the bell button next to the subscribe button so that you're not going to miss out. It will be great motivation for me to continue making better videos for you guys.